$87. That is where silver closed heading into this week after surging over 5% in just 4 trading sessions. And what triggered this explosive move is something that has never happened before in the history of American trade policy. On Friday, the United States Supreme Court struck down President Trump's tariff regime in a 6-3 ruling. Within hours, Trump fired back with a brand new 15% global tariff on every import entering the country, effective today, February 24th, 2026. And while the mainstream media is focused on the political drama, they are completely missing what this means for silver. Because what I found in the COMEX data this week changes everything. Where are you watching this from right now? Are you pulling this up on your phone in New York, where markets are about to open? Are you watching this from London? From Mumbai, where silver ETFs just surged 17% in a single session? Are you in Sydney watching the Asian session unfold? Drop your city and what time it is there in the comments below. I want to see how global this community really is. And if you are serious about understanding what is actually happening in the silver market right now, subscribe to this channel. I cover what the mainstream financial media refuses to touch, because what is unfolding right now is not just a news story. It is a structural shift in how precious metals are being priced, and most people have no idea it is happening. Let me walk you through the crime scene. Friday, February 20th, the Supreme Court rules that Trump exceeded his authority when he used the International Emergency Economic Powers Act to impose sweeping tariffs on imports from nearly every country on the planet. Chief Justice Roberts wrote the majority opinion 6-3. This was not a close call. The court said the president does not have the unilateral power to impose tariffs without Congress. This is the single biggest legal blow to Trump's economic policy since he took office. Over $200 billion in tariff revenue has been collected since Liberation Day last April, and now there is a very real question about whether companies are entitled to refunds. Some estimates put that number at $100 to $175 billion flowing back into the economy. Think about what that means. That is effectively a massive stimulus injection on top of the tax cuts already in the pipeline. But here is where it gets interesting for silver. Trump did not back down. Within hours of the ruling, he announced a 10% global tariff under Section 122 of the Trade Act of 1974. By Saturday, he raised it to 15%, and that 15% tariff takes effect today, right now, as you are watching this video. So what does this mean for silver? 3 things happened simultaneously that created a perfect storm for precious metals. First, the tariff chaos sent the US dollar lower. When the dollar weakens, silver and gold historically surge because they are priced in dollars. We saw gold punch through $5,150 per ounce. Second, Trump's 10 to 15 day ultimatum on Iran's nuclear program has the entire Middle East on edge. The USS Gerald R. Ford aircraft carrier has been deployed to the Mediterranean. Military analysts are talking about limited strikes. This is not theoretical. This is the kind of geopolitical risk that sends institutional money flooding into safe haven assets. And third, the economic data released on Friday showed core inflation running at 3% annually, while GDP growth slowed to just 1.4% in the fourth quarter. That is the textbook definition of stagflation. And if you know your monetary history, you know that stagflation is the single most bullish environment for precious metals that exists. Now let me show you what nobody else is talking about. Drop a comment telling me how many ounces of silver you are currently holding. I want to see the strength of this community, because what I am about to show you is going to make you feel very good about your position. COMEX registered silver, that is the silver actually available for delivery against futures contracts, just dropped below 100 million ounces for the first time. Let me put that in perspective. In 2021, COMEX registered silver sat at 152 million ounces. Today, it is below 98 million. That is a decline of over 70%. And here is the part that should make the hair on your neck stand up. The Shanghai silver price is currently trading at a $10 premium above London and New York spot prices. Under normal market conditions, that spread gets arbitraged away. Traders move physical metal to wherever the price is highest until the gap closes, but the gap is not closing. Why? Because China implemented export controls on January 1st that limit silver exports to just 44 licensed companies. The metal cannot flow freely anymore. You have a situation where the East is paying significantly more for physical silver than the West, and the pipeline between them has been deliberately narrowed. JP Morgan just published their 2026 silver outlook, forecasting an average price of $81 per ounce. And I have to be honest with you, I think they are going to be embarrassed by that number. Not because it is wrong, but because it is conservative. When you have COMEX vaults draining at nearly 800,000 ounces per day, when you have the Shanghai Premium refusing to close, when you have a Supreme Court ruling that just injected massive uncertainty into global trade, when you have a potential military conflict with Iran, and when you have Goldman Sachs targeting $5,400 gold by year-end, $81 silver is not a bold call. It is the floor. If this forensic breakdown is opening your eyes to what is really happening, hit that like button right now. Let the algorithm know this content matters. Now, here is what I need you to understand about what happened in January, because this is the key to understanding where silver goes next. On January 29th, silver hit an all-time high of $121.67. The very next day, the CME hiked margin requirements by 18%, and silver crashed nearly 50% in a matter of hours. That was not a natural market event. That was a coordinated reset. The same playbook was used against the Hunt brothers in 1980. The same playbook was used in May 2011 when silver hit $49. Every time silver threatens to break free from paper market control, the mechanism is the same. Raise the cost of holding futures contracts, force leverage longs to liquidate, crash the price, then let the institutions who triggered the crash buy the dip at a massive discount. And that brings me to the question that matters most. Who was buying during the crash? Because while retail investors were panic selling, someone was accumulating. SLV, the largest silver ETF, saw record inflows of $171 million in the days before the crash. COMEX January deliveries hit 49.4 million ounces. That is 7 times higher than January 2024. Someone is taking physical delivery at a pace we have never seen before, and they do not care about the paper price. Physical silver or mining stocks? What is your play right now? Comment below because I want to hear both sides of this debate. Now let me give you the 3 scenarios I am watching for March, and I want you to track these because one of them is going to play out. Scenario Alpha, which I am calling the tariff squeeze. This is the scenario where Trump's 15% global tariff creates enough economic uncertainty that safe haven flows into precious metals accelerate, the dollar continues to weaken, silver breaks above $90, and retests 100 by mid-March. The March COMEX delivery period, which starts on February 28th, sees elevated demand that further drains registered inventory. I am giving this a 40% probability. Scenario Beta, I am calling this the Iran escalation. If the US-Iran negotiations fail and Trump orders limited military strikes, we are looking at an immediate spike in oil prices, a surge in safe haven demand, and silver potentially retesting its January highs above $110 within days. The Strait of Hormuz risk alone would send every commodity on the planet higher. I am giving this a 25% probability in the next 30 days, and it increases every week that negotiations stall. Scenario Gamma, the consolidation grind. In this scenario, some combination of diplomatic progress with Iran and market adjustment to the new tariff regime calms things down. Silver consolidates in the $80 to $90 range through March, while the market digests the January crash and builds a new base. This is still bullish long term because the structural supply deficit has not changed. We are still in the 6th consecutive year of global silver deficits with 200 million ounces of projected shortfall in 26. I am giving this a 35% probability. Here is what matters. regardless of which scenario plays out. The physical market is tightening, COMEX vaults are draining, Eastern demand is overwhelming Western supply, central banks are buying gold at a record pace, with the People's Bank of China extending purchases for a 15th consecutive month. Goldman Sachs is targeting $5,400 gold. The gold to silver ratio sits at around 59-1, which is already compressed from recent levels, but historically still favors silver outperformance. Every single macro indicator points in the same direction. I am not going to tell you what to do with your money. That is not what this channel is about. This is not financial advice. I am sharing what I am personally researching and what the data is telling me. But I will tell you this, the people who held through the January crash, the people who did not let a margin hike shake them out of their position, those people are sitting on silver that was $82 3 weeks ago and is now approaching $88. And every single catalyst on the horizon, the tariffs, Iran, the COMEX squeeze, the March delivery period, the Fed rate cut expectations, every single one of them points higher. Be honest with me right now. Type I sold or I held in the comments. No shame, only lessons, because the January crash was the test. And the people who passed that test are about to be rewarded. Share this video with one other silver stacker who needs to hear this analysis right now, especially if they panic sold during the crash. They need to understand what is actually happening beneath the surface. The mainstream financial media will tell you silver is too volatile. They will tell you the January crash proves precious metals are dangerous. What they will not tell you is that COMEX vaults just hit historic lows, that China is hoarding physical metal behind export controls, that the Supreme Court just detonated the global trade framework, and that every major bank on Wall Street is raising their precious metals targets. This is not the end of the silver story. This is the beginning of the next chapter, and I will be here every single day breaking down exactly what is happening. Subscribe and hit that notification bell so you do not miss a single update, because in this market, being one day late can cost you everything. I will see you in the next one. Stay sharp, stack smart,